Hello and welcome back to the Note. It's been a great day for stock markets in Europe. That's because the deal to give Greece another 4 months to get its act in order actually went through. That helped propel the UK FTSE 100 index to its first all-time record since 1999. I'll be back with more about that later. But here in the US, by far the biggest story was the testimony by Janet Yellen, the Fed chair, to Congress, and what was most interesting about that testimony was that it had little or no impact on markets. Overall, you see the S&P 500 rising 0.28% to another all-time high. You saw bond yields come down a bit. In the case of the 10-year, they're back below 2%. The dollar was roughly flat. All of this is in line with the notion that that testimony was fundamentally dovish, that the Fed now seems less likely to raise rates than they did before. I would question that interpretation, although certainly it does seem as though Janet Yellen wanted to give herself more room for manoeuvre. She's now discussed what it would mean once the word patience gets removed from the FOMC communique, plainly suggesting that that could indeed come at next month's meeting. She's confirmed that that did indeed mean that there wouldn't be a rate rise for at least another two meetings after that. But what she now wants to say is that once the word patience has been removed, then the Fed could raise rates or not at any meeting after that, and that will be largely data dependent. The data that she will be looking at most clearly would be the data on the labour market. If there are clear signs that the slack in the labour market is being consumed, they would start the process of normalising. Now, she plainly A, wants to raise rates if she can, and B, not scare the markets too much in the process. Either this is going to go down in history as a quite remarkable job by the Fed of steadily but slowly climbing back down from the ridge it had moved itself out onto. Everybody knew that retreating from its extreme monetary policy would be extremely difficult. So far, give or take the taper tantrum in 2013, it seems to be doing that job remarkably well. As Janet Yellen really told the markets today, I could be raising rates more or less any time from now on, and the market response was positive. The markets plainly seem to be calm about that at the moment. The other way to look at that, which is perhaps rather less positive, is that the markets still don't quite grasp the reality that unless something very surprising happens in the data in the next few months, rates will be rising in the US in the next matter of months.